It is when the owners of that debt, we have, over $36 trillion essentially of government debt, when they start to also fear that it may be monetized, like the Japanese. Japanese is a very good example. Japanese, if you have terrible investment to own bonds, they didn't go down in value, but you got an interest rate that was 3% below another interest rate, US interest rate by example, and the currency depreciated by 3.5%. They were losing 6.5% a year for many, many years. That's what it can be like. Of course, there's an inflation component that enters into the depreciation. One of the things I also want to emphasize is people pay too much attention to depreciation against another exchange rate. Normally at such times, many countries have this issue and they don't want their currency to depreciate. So what you see is the depreciation of all currencies in relationship to things like gold or other assets, and that's where you have to pay attention to it.
So if there is a debt wall out there somewhere that we will run into, how close are we to it? And how can we tell? As with our personal finances, Dalio says it's when we end up borrowing not to invest in our future, but to pay the interest on what we've already borrowed.
Debt isn't a problem if the debt is used to produce an income that is large enough or larger than enough to service the debt. It's like a company, if you were like your finances. But what happens is it accumulates, tends to accumulate. Think of it like a disease that has a progression, and it goes through these various stages. And so you can kind of see where the stages are. We're relatively late in the cycle because we're also having central banks lose money. That's a marker. When their balance sheet deteriorates, when they have a negative net worth,